What is going on, everyone, and welcome back to Explain the Charts. Today, we are diving deep into Microsoft, symbol Microsoft, which has been making headlines for all the wrong reasons lately. The stock has seen a significant pullback in the last couple of days, and there's a whirlwind of conflicting news creating uncertainty in the market. On one hand, we have a rare and notable analyst downgrade from Rothschild, cutting its rating to neutral and slashing the price target to $500. The analyst cited concerns that the economics of generative AI are far weaker than the market assumes, sending jitters through the tech sector. Adding to the pressure, the European Union has launched a probe into Microsoft's Azure cloud services, questioning if it should be designated as a gatekeeper under new regulations. This regulatory overhang adds another layer of risk for investors. However, the bullish case for Microsoft remains incredibly strong in the eyes of others. The company just secured a landmark deal with AI startup Anthropic, which will spend $30 billion on Azure cloud compute. In response to this, a Morgan Stanley analyst reiterated a bullish overweight rating, setting a massive $650 price target and arguing the stock's potential is underappreciated. So we have a classic battleground scenario: bearish sentiment fueled by valuation concerns versus a powerful bullish narrative based on fundamental growth and market dominance. Let's jump into the charts to see how this story is unfolding in the price action. Looking at the daily chart for the past year or so, we can see the broader context of this recent move. Microsoft has been in a powerful uptrend since its 52-week low around $345 back in April. The stock went on an incredible run, culminating in a massive gap up on July 31st. On that day, it hit its all-time high of $555.45, but look at how that candle closed. It sold off aggressively throughout the day, forming a bearish shooting star pattern on enormous volume, signaling a major exhaustion point. That $555 level is now the ultimate long-term resistance that bulls will eventually have to conquer. Since that peak, the price action has been much weaker, entering a prolonged period of correction and consolidation. We've been making a series of lower highs and lower lows, indicating that sellers have been in control for the past few months. Now, let's zoom in on the action since September to get a clearer view of the key levels. For most of September and October, the stock found strong support at the critical psychological level of $500. You can see how it bounced off this area multiple times, establishing it as a solid floor. During this time, resistance was forming in the $530 to $540 zone. The recent bearish news was the catalyst for a decisive break below that $500 support level. Notice the two large red candles on November 18th and 19th, accompanied by a significant increase in volume. This confirms there was strong conviction behind the selling pressure. The low from yesterday at $482.83 is now the most important immediate support level to watch. For any bullish reversal to begin, buyers must first reclaim the $495 to $500 zone, which has now flipped from support to formidable resistance. Switching over to the 1-hour chart, we can see the anatomy of this recent sell-off more clearly. The drop was aggressive and relentless, with very shallow bounces that were quickly sold off. This indicates that sellers have been in firm control of the short-term trend. Each attempt to rally was met with more supply, pushing the price lower. We are currently seeing a small bit of consolidation right at the lows, just above that $482 mark. Traders will be watching to see if a base can be built here or if this is just a brief pause before the next leg down. A break below yesterday's low on this time frame would be a very bearish short-term signal. Drilling down even further to the 15-minute chart for the last couple of days gives us an intraday perspective. Here we can see the gap down yesterday morning on November 19th, followed by a grind down to the session low of $482.83. The price did manage to bounce a little bit into the close, finishing around $487. What we need to see for a potential short-term bottom is a clear change in character. Bulls want to see the price start making a series of higher highs and higher lows on this time frame. For example, a move above the $490 to $492 area would be a small first step in repairing the immediate damage. Until that happens, the path of least resistance remains to the downside, and any rallies are likely to be sold. Okay, let's go back to the daily chart to recap and discuss the outlook. The technical picture has turned bearish in the short term following the break of key support. Let's summarize the critical price levels you need to have on your radar. Immediate support is the recent low at $482.83. If that level breaks, the next major support area to watch is around the $460 to $465 zone, which was a pivot area back in June. On the upside, the first major hurdle for bulls is reclaiming the $495 to $500 area. Above that, the next significant resistance is the $510 to $515 zone. So, what's the prediction? The bearish case seems more likely in the immediate short term, with about a 60% probability. The momentum is clearly down, and the break of $500 was technically significant. A failure to reclaim that level soon, or a break below $482, would reinforce this bearish outlook and could see the stock fall toward the $460s. The bullish case has about a 40% probability of playing out. For this to happen, buyers need to step in and defend the $482 level forcefully. A strong bounce and a close back above $500 on high volume would signal that this was a shakeout and the longer-term bullish fundamentals are taking back control. Keep a close eye on volume during the next few sessions. A bounce on weak volume is suspect, but a recovery on strong volume could signal a genuine reversal. And of course, be on the lookout for any further headlines regarding analyst ratings or the EU investigation. Those are the key things to watch right now. I hope this analysis was helpful for you. Before we wrap up, a quick reminder. This video is for educational and informational purposes only and should not be considered financial advice. Always conduct your own research and due diligence before making any investment decisions.